I just don't want to own it, right? Like an American doesn't want to own Chinese real estate. An American wouldn't want to own China coin. But in theory, if you understand the economic theory of a crypto commodity, you could create it. It's just very unlikely at this point you can ever create a global money that's a crypto commodity because Bitcoin has $1 trillion of smart money behind it. And the next best thing doesn't have even 1%. I mean, less than 1% of that.
Michael Saylor, executive chairman of MicroStrategy and a longtime supporter of Bitcoin, has once again positioned the digital asset as a key way to protect capital in a world economy that is becoming more unstable. For a long time, Saylor has been in favor of Bitcoin. Saylor has recently said things that stress how important Bitcoin is for changing the way we think about financial security. Not only has he talked about Bitcoin as a way to speculate, but also as a way to protect against inflation and systemic risk. He said that the global financial system is about to go through a paradigm shift, and that decentralized digital assets like Bitcoin will become more important during this time. Saylor's story shows how Bitcoin can be used as a safety net during times of trouble, which is appealing to investors and institutions seeking stability beyond traditional financial instruments and fiat currencies. Even though many people are skeptical of Bitcoin and regulations are changing all the time, it is still proving to be an important asset class. His ideas continue to fuel discussions about how modern finance is changing.
Well, that's been the debate for a decade, right? And it's been a massive debate and a massive source of confusion, which is, are there other digital commodities? And the position of the previous administration, Christine, was you're either a commodity, in which case you can trade on a crypto exchange legitimately, or you're a security, in which case it's illegal. We're going to sue you, shut you down, or jail you. You see, so we had a false dichotomy, and in that world where you're either going to die, the best case is economic death, and you're blocked from the banking system. By the way, everybody's blocked from the banking system, even Bitcoin.
Sorry.
I think there's only one universally acknowledged digital commodity in the world.
Okay.
Right? There's only one. There's Bitcoin. I've said that, right? There is no second best. I've implied that and said that, and I've spent $33 billion based on that. So yeah, it was my view 4.5 years ago. There's one digital commodity. But Christine, there's a more important point here. Even if there was a second, third, and fourth, like let's take the fork wars, Bitcoin Cash, Bitcoin Satoshi Vision. Even if you fork Bitcoin and you maintain that's a commodity, they're all going to zero if the use case is store of value or or money, right? Because if you were to fork Bitcoin and claim it's decentralized, the free market is going to pick the strongest network, and it's going to be monetized, and everything else is going to zero. So it doesn't matter from a practical point of view. My position is not that you couldn't theoretically create another digital commodity. For example, if China forked Bitcoin and declared China coin, and then said it's legal to mine China coin and it's tax-free to hold China coin, and you can bank China coin in China, in theory, the power of a nation state could create digital property in China. Just like for example, I acknowledge that real estate in China is an asset without an issuer. I just don't want to own it, right? Like an American doesn't want to own Chinese real estate. An American wouldn't want to own China coin. But in theory, if you understand the economic theory of a crypto commodity, you could create it. It's just very unlikely at this point you can ever create a global money that's a crypto commodity because Bitcoin has $1 trillion of smart money behind it. And the next best thing doesn't have even 1%. I mean, less than 1% of that. In my speech at the National Press Club on Tuesday, I covered this in a 30-minute presentation for the Bitcoin Policy Institute, and I would encourage anyone to go grab that. It's on my X profile. I posted it. The point that I make is that there are four different metaphors, four different ways to understand the Bitcoin network. You can understand Bitcoin as digital capital. It is the asset without the issuer. If it's digital capital, then it's going to grow to a $200 trillion plus network over time. And the value to the United States is anywhere from $3 trillion to $100 trillion if the US begins to acquire that network. So, as digital capital, it can negate or retire the national debt, or it can convert us from owing 40 trillion to owning 40 trillion of net assets. So it's a very powerful financial lever. And the companies in the United States, like my company, they're capitalizing on Bitcoin. They're going to be worth 20 to 40 trillion dollars just on their Bitcoin assets if they continue to capitalize. So understood as digital capital, Bitcoin is enriching the corporations and the government itself, depending upon how much Bitcoin those entities own. That's the first metaphor. The second metaphor is Bitcoin is digital property. If you think of it as gold or cheese, nobody rents their cheese or mortgages their cheese. But when you think of it as owning 100 acres in Manhattan, if your family owned 100 acres of Manhattan 100 years ago and you owned it this year, and I asked you, what's your family doing with it? How are you going to pay your bills? You wouldn't say, well, we're going to sell our property in Manhattan. You would say, we're going to rent it, we're going to develop a building on it, or we're going to borrow against it. We're going to finance it. And so you would generate billions and billions of dollars off of 100 acres of real estate in Manhattan without ever selling it. It's property. And so Bitcoin as property means you will be able to rent it, finance it, or build businesses on top of it in the cyber economy. That would be worth $10 trillion to the United States in 2045 each year, right? We could generate $10 trillion off of the digital property that the United States buys in the strategic
to
Bitcoin
pay off
reserve.
The national debt?
Well, you wouldn't be a national debt. You would basically flip from being a net debtor to a net creditor, and you would generate yield. So that's a very powerful idea. Just like the company that owns $100 billion worth of real estate generates billions and billions of dollars of rental income a year. Or if I have $100 billion of capital, I can generate $5 billion a year just loaning the capital out.
Since the beginning of 2025, the cryptocurrency market has been going through a very rough patch. Unfortunately, both Bitcoin and Ethereum's values have dropped a lot because of changes in the economy as a whole and ongoing regulatory uncertainty. An analyst named Path Hundle says that a big vertical recovery doesn't look likely in the near future. Reason for this is that Ethereum's value has dropped by almost 38%, making it the worst performer in the first quarter since 2018. Bitcoin has also had its biggest drop in value in a quarter since the start of 2018-2020. These setbacks show how uneasy the market is as a whole because investors are having a hard time dealing with rising prices, changing central bank policies, and unclear legal frameworks in many major jurisdictions. There has been a general feeling of negativity since the beginning of the year, which can be seen in the market capitalization of the digital asset sector. There are experts who think that Bitcoin might be able to resume its upward trend once the macroeconomic conditions become more stable. However, the current signs point to continued volatility. Market participants are now taking a defensive stance. Because of this downturn, the need for strategic patience and risk-adjusted decision-making in the coming months has increased. This downturn has also made the volatile and often unpredictable nature of the crypto asset class more clear.
Yeah, so the point is everyone that's tried it has failed, and everyone that tries it probably will fail against Bitcoin. Bitcoin is the winner. It's the orange dwarf. It's got the network effect, and it is the most powerful global capital asset and global property asset. So if you think about, let's take every country in Africa. You think there's a country in Africa that can launch the next Bitcoin that won't collapse against Bitcoin? Now take every country in South America. Is Brazil going to be able to launch an asset that you would want to own more? No. Now take every country in Europe. The euro is the second largest currency and the best currency in the world other than the dollar. 99% of the demand for digital currency in Europe is for the dollar. Okay, so the Europeans can't even compete against the dollar. Will the Russians be able to launch something? No. Will the Chinese? No. Why? Nobody in China wants to own anything in China, Christine. How do I know that? Because there's a law, right? The Chinese make it illegal to move more than $50,000 of capital a year outside of China. If the Chinese drop the capital control, all of the capital in China would flow out of China. And so there will be geopolitical jostling, but Bitcoin is already the winner. It's reached escape velocity. And if the US government begins to acquire it aggressively, not only are they a beneficiary, but they will force every other country on earth to adopt Bitcoin as the global capital. In fact, what will really happen is the Japanese, the Canadians, the Mexicans, the Brazilians, all the Africans, all the Europeans will immediately, well, not immediately, they will inevitably, is the right word, inevitably begin to convert their physical and financial capital into digital capital on the Bitcoin network. It becomes a fait accompli. They almost can't stop it, right? So it's one of those geopolitical moves that when you embrace the network, you force all of your allies first to adopt it, and then all your enemies have to adopt it. There's 4 different metaphors for Bitcoin. There's digital capital, there's digital property. The third important metaphor is it's a digital energy network. And the AI economy is going to be built on digital energy by moving energy, money at the speed of light, at the speed of a computer. It's a $100 trillion economy. There is one digital energy network. If you own it, if you control it, you control and participate in that $100 trillion economy. If you don't, you're locked out of the economy. The AIs are going to think 1 million times a second, and they're going to want to trade 1 million times a second with each other. You can't do it without a digital monetary network, and that'll be built on Bitcoin as the settlement network. So the entire future of the banking system and the digital commerce system and the AI economy, it's all going to be based upon digital money, digital energy, digital capital. And so that's important. And then the fourth metaphor is it's a digital defense system, because the measure of power in cyberspace is the exahash. If you want to create a system that can't be corrupted, censored, tampered with, or hacked by an AI or by another computer, you need raw power combined with the power of cryptography, a wall of digital energy or encrypted energy. And so if I wanted to send $10 billion into a war zone, the only way to do it is with Bitcoin. If I want to lock down a cyber system against cyber attack, where I want to authenticate it and make it tamper-proof, what you want is public-private key cryptography embedded into the Bitcoin blockchain, backed by 20 gigawatts of electricity, 850 exahash. No one can crack that, right? And we have a situation today where Satoshi could prove to you in 1 second that they are in possession of $80 billion worth of capital by simply signing a message with their private key. That has profound cybersecurity implications for the country. So when you put them all together, right, digital capital, digital property, digital, energy, and digital defense, what you can see is that you either are going to own cyberspace, and owning cyberspace is owning the asset and controlling the network, controlling cyberspace, or your enemy does. And if you lose control of your airspace, you get bombed back to the Stone Age in 1 week. You lose the country. If you lose control of the sea lanes, you lose the country. If you lose control of cyberspace, not only can you not send money between New York and Tokyo, you can't send money between New York and Chicago. You can't even send money between your computer and the computer in the same room next to you in a secure fashion. So in this case, the reason this is important to US digital supremacy is the future economy is digital intelligence, and it's going to need to move digital energy protected by digital power in order to engage in digital commerce. And Bitcoin is that digital energy network, and that's why it's in the best interest of the US to own it.
While the market is having problems right now, there is a different story that is based on looking at long-term data that is more positive about Bitcoin. An economist at Bitcoin Network named Timothy Peterson says, there is a 75% chance that Bitcoin will hit new all-time highs in the next 9 months. He thinks this is likely based on Bitcoin's price history over the past 10 years. This prediction is based on where Bitcoin is now, which is close to the bottom of its historical trading range. This means that there is a good chance that the cryptocurrency will go up. Peterson says that April and October have historically posted strong average gains of 133% and 22% respectively. He also says that there is a 50% chance that Bitcoin will rise in value by more than 50% in the next few months. On-chain data from CryptoQuant supports this bullish case. It shows that key liquidity zones are forming around the range of $84,000 to $91,000, which are important levels where investor psychology may cause a lot of buying or selling pressure. Analysts say that people need to be careful because the market is naturally unstable, even though seasonal patterns and address-level accumulation show that prices will soon go back up. As the cryptocurrency industry grows up, these kinds of insights give investors a strong framework they can use to find a balance between long-term optimism and short-term caution.